Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The other news of the day, of course, is that the House passes the big, beautiful bill. Now it heads to the Senate. Joining us now for more details on that is Michael Shepard, Bloomberg Senior Editor in Washington. All right, what are the sticking points for the Republicans in the Senate now?
Well, what they're looking at are really the same sticking points that had really caused such a fight in the House. And the first is reservations about the overall long-term fiscal impact of the bill. There is a concern that this will add significantly to deficits. The Congressional Budget Office found that it would add as much as $2.3 trillion to deficits over the next 10 years. And that, of course, risks exacerbating what we've been seeing in the bond market. And that namely is concern about ballooning U.S. debt. And that was all highlighted by Moody's decision last week to downgrade the U.S. government's credit rating. And the other big concern, of course, is Medicaid. And we've heard this come up from some House members, and there was a bit of a split. There were a handful of conservatives who really wanted significant cuts to the program that helps the poor receive access to medical care with government support. But there are others who were concerned about the impact in their districts and their states and the political fallout. In the Senate, concerns about the impact politically and on healthcare in their states has been more vocal. And we saw Josh Hawley, a key Republican who represents a more populist wing of the party, expressing grave worries about what would happen to Medicaid, especially in his state of Missouri. So we're going to be watching those two themes, both on the fiscal side, but then also on what happens to that key entitlement program of Medicaid, Alix.
Michael, what's the timing here for the Senate? We know the Speaker of the House said, hey, we're going to get something done by Memorial Day. He did that. How about the Senate? What's their timetable?
Well, Mike Johnson delivered with a big assist from Donald Trump, who really drove lawmakers hard. He met with the Republican conference earlier in the week to say basically that anyone who voted against the bill or failed to support it and stood in its way it would be guilty of the ultimate betrayal and would pay the price in the next congressional elections. In the Senate, it's a little bit of a different ball game. It's unclear that the leadership there is as enthusiastic about the bill with that same sense of timing. The Treasury Secretary, Scott Bessent, and the president really would like this done by July 4th. That may be a big ask. We're really a little bit more than a month away. Lawmakers are going out on Memorial Day recess, and the Senate does want to make some changes. They do face a deadline, though, Paul and Alix, and that is on the debt limit. The bill does contain a measure that would raise the U.S. borrowing limit and help us avert that thing that we fear of a U.S. default. We're seeing an X date somewhere in August, at least according to the Treasury Secretary. So that gives them a target to work for before their August recess. But they do have a lot to get through. And the president may have to do some arm twisting in the Senate as well, just as he did in the House.
So talking my book here, I was really interested that they pushed forward the rollback for some of the clean energy tax credits. So the renewable investment tax credit and production tax credit is now going to be done in 2028 rather than 2029 and 2031. And there are other parts of that as well that have really put pressure on the clean energy guys. A lot of the clean energy projects are in red states. So how are Republican senators going to manage that?
Well, that's a great question, Alix, and it is something that really divided the caucus in a way because they do like getting that money. And it's sort of the same tension that we've seen in Republican and opposition from the president himself to the CHIPS Act and some of that funding and some of those subsidies. They like having the projects in their state, yet when they look at ways to find savings for this pretty expensive tax bill, they start looking for everything. And it's not only Medicaid, but as you mentioned, it is those clean energy projects and programs. They're trying to say that, look, we are going to accelerate the timeline, but not eliminate them entirely there.
All right. Michael, thank you so much for joining us. Michael Shepard, Senior Editor, Bloomberg News, joining us from Washington, D.C., talking about some tax legislation. A big move forward today for President Trump in the House.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix, Paul Sweeney live here in our Bloomberg Interactive studios, streaming live on YouTube as well, and also on that connected TV stuff. Think Roku and Samsung TV. If you got that kind of stuff, you can get us. Bloomberg Originals is kind of where you go find us there. Again, the Justice Department is probing whether Alphabet's Google violated antitrust law with an agreement to use the artificial intelligence technology of a popular chat maker, according to people familiar with the knowledge of the matter. It's not that they're probing an acquisition that they want to make. It's using somebody's technology. I don't know. Stock's up 3% on the news, so it doesn't seem like the market's that worried. Mandeep Singh, he'll tell us what's going on here. He covers all the technology stuff for Bloomberg Intelligence. Mandeep, I mean, usually the DOJ comes in when you make an acquisition and says, whoa. But this is just looking at a deal or a contract they made with some AI provider?
Yeah, I mean, in fact, all three of them, Google, Microsoft, and Amazon, did this acqui-hires of these startups back in 2024. So these were three different companies. Google did that for Character.AI. Microsoft had the same sort of setup for Inflection. And then Amazon did it for Adept, which is another small AI company. And if you remember, back at that time, Lina Khan was the force, and everyone was reluctant when it comes to making these acquisitions. So this was their way of licensing the technology. They were effectively paying a license fee, and in most cases, it was non-exclusive. But it ended up basically bringing those employees to work for Google in a way where it wasn't an outright acquisition. It was an independent company still, but they paid the current shareholders of those companies a licensing fee, which pretty much was like
That's
65 to 70
kind of transaction. Some smart lawyer somewhere came up with that.
But how different is this from what, say, Microsoft is doing with OpenAI?
Well, that's a 49% stake one. And in that case, in the case of Microsoft, you're right. I mean, the comparison is apt in the sense that OpenAI still remains independent and they're launching their products. In this case, a lot of the folks who were working at Character.AI did end up working on Google's projects. And so same thing with Microsoft. The folks at Inflection.AI did end up working on Microsoft's projects. That didn't happen in the case of OpenAI. OpenAI still is kind of doing its own thing when it comes to model training and everything. Microsoft is just licensing their technology. That's not the case here in terms of Character.AI, because Character.AI was a company with less than 200 employees. And Google ended up licensing that for almost $2.5 billion. So think of, a license fee of $2.5 billion.
That feels hearty.
Yes.
Yeah.
And so,
I see. I get it.
I think there was that aspect which was kind of in between in terms of how do you make an acqui-hire without an outright acquisition, and the amount was pretty big, and everyone was surprised. But all these three companies did that one after the other.
Yep.
So they somehow got away, and now we are seeing the DOJ is looking into it.
All right. If I'm on Sand Hill Road in Silicon Valley, where all the smart money is, how do I view this administration here? Are they pro-tech or not pro-tech?
I think so far they are looking to bring down the regulations for sure. We have seen some pretty big deals getting announced. I mean, the Google's acquisition of Wiz, that is an M&A, $32 billion. And so there has been a flurry of M&A activity. So I would say they are pro deal making. At the same time, I think with big tech, every company is different in terms of, how the administration views them. And, the DOJ and FTC have been doing these investigations. So it doesn't surprise me that they're looking into it. I doubt, there will be a big fine, but probably you should talk to Jen Rhee, our legal expert, if what she thinks about this.
But, Paul pointed out that the stock is up over 3%. How much of that is like ignoring the headlines versus still going back to the AI developer day for Google, where they unveiled the whole suite of products.
Yeah, I mean, that was a great event. And overall, I think the sentiment this week is still Google's models are getting better. Their execution is getting better. They're shipping a lot more products. So this seems to be something that, yes, they are involved with. At the worst cases, they may have to pay a fine, but really nothing changes as far as their AI development efforts.
When I started my career on the street in the mid-'80s, it was all about Microsoft and the regulatory challenges they were just starting to go through, primarily with European regulators, and we were freaking out like every day, like, oh my God, there's going to be it. And then we look back on it 10 years later and we're like, nothing happened. And I think a whole generation of us have kind of become conditioned to viewing big tech and regulation as not that big a deal. Don't worry about it at the end. I wonder if we're getting too complacent, though. Will they ever say Amazon break up, Google break up, or one of those things?
I mean, there is always a probability of that happening. I still think it's a low probability event, given everyone wants these companies to do better than the equivalent Chinese companies. And so that aspect still remains. And look, the worst case with these sort of investigations is these companies may end up paying a fine. That's what we have seen in the EU. Google has paid over, $10 billion in fines. And the stock will still be okay because this is just one time. They make the remedies and you move on. So I think that's the worst case here in terms of a slap on the wrist. And, you change the behavior. You're not going to do more acqui-hires like that, billion-dollar acqui-hires. But beyond that, it's hard to fathom.
All right, Mandeep, thank you so much. We appreciate it. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, Walter Todd is President, Chief Investment Officer, and Managing Director at Greenwood Capital. I got to say, the markets are a little surprising to me, but just take a look at the bond market for a second. Is the long end getting yippy?
That's a nice technical term for it. Getting a little skittish, maybe another way to describe it. The 20-year auction yesterday, you definitely look at the intraday chart and saw the equities key off of that. 20 years, a little bit of an unusual maturity. The Fed owns a ton of that sleeve, so not that surprising perhaps. But I know everybody's focused on that 30-year bond rate, but it's really the 10-year that's key. I mean, that's what a lot of assets are priced off of. So that's a touch lower today, and you see equities kind of keying off of that.
So those rates are pretty attractive here. Todd, are you getting increased discussions with your clients about, hey, should I be upping my allocation to fixed income? If I can get a 2-year treasury at 4%, I would take maybe a little bit more duration risk and get, more than 5% on a 30-year?
We're not going out that far, but a lot of our accounts are balanced accounts, so we do have fixed income exposure within that. Our kind of target maturity or duration is in that, call it 3 to 4 year range, but that's a barbell. So some 1 and 2 year paper, as well as some maybe 5 out to 7, but nothing really longer than that. So these are attractive yields, as you say. If you put a corporate spread on top of that, which have come in lately, but still decent, you can lock in some good rates for a multi-year period, which we find attractive. Now, interestingly, you've got several corporate issuers that are rated above the U.S. government debt at this point, J.P. Morgan being one of them, J&J another, and the credit default swaps for the U.S. government are actually higher than they are for J.P. Morgan at the moment. So there's a balancing act there between the two.
If you kind of ignored the last 2 months, you'd be kind of no worse off, unless you're talking about the bond market or to the dollar, than you would have been before. So how do you then understand equity market volatility going forward?
Yeah, Alix, is a great question. And the equity market volatility has been extreme over that. If you've gone under a rock, like you say, 2 months ago and come out now, you're basically break even. I think we're going to continue to see volatility. And I think it's going to be keyed off some of these macro headlines, whether that's something affecting interest rates, whether it's this bill that has now moved out of the House into the Senate, which, by the way, this is the end of the beginning, not the beginning of the end, in my opinion, in this process. And then also finally earnings. I mean, we kind of forget about fundamentals of individual companies. They actually came in a bit better than expected in the first quarter, but revisions did come down quite significantly for the second quarter. So I think depending on the time of the year, the month we're in, and where we're going to key off of macro headlines or fundamental headlines, and then we have the trade component as well. So all of those things mixed together to what we think continue some volatility, but take advantage of that where you have companies that know and understand and feel like are going to weather the storm.
Walter, what do you make of the stock market? It's seemingly we've round tripped almost here off of the 20% declines that we had earlier in the year when people were really trying to get their handle around what a world of tariffs means. Are we appropriately priced here? Do you think the market's ahead of itself, or is there still upside here, do you think?
Yeah, I think in the near term, the market's come a long way in a very short period of time, and is probably, as Jamie Dimon I think used the term complacent to describe investors. We would tend to agree with that. Where we are today, I don't think we're pricing in a lot of risk. We're pricing in a lot of deals that have been talked about happening but haven't happened on the trade front yet. So what we've been doing is just trying to stay disciplined on our sizing within positions. So names that have run significantly in the past 5 to 6 weeks, if we have a target of 2.5%, and that weight's now well over 3%. We're running that back to model, as we call it, for example. So just trying to stay disciplined within the process and take advantage of the move that we've had and kind of reload for some more opportunities to come.
If we do get this big, beautiful bill passed and we get tax cuts or tax cuts extension, if we wind up getting deregulation and the Fed, as William said earlier today, could cut in July if tariffs come down to 10%. Is this like a complete then bull market? Like, can we finally look towards discounting all that good news?
Yeah, it's a good point. No, but I mean, there's a long way from here to there, I guess I would say. So as it relates to the Fed, I think it's a stretch to say that we go in July, because you got to think about all this bill includes, is kind of pro-growth, post-stimulus. That's going to create upward pressure on prices, you would think, if growth improves. So I think the Fed's going to be on hold. So I don't think they're going to come into the picture probably till the fall. But yeah, no, listen, if you incrementally get this bill passed, the debt ceiling increased, if you get some trade deals, we're going to run up on that 90-day window in early July. So we've got to see some progress there. But yeah, it could create the catalyst for us to move up through those highs that we hit in February and beyond. I just think between now and then, we could see some downside.
Walter, thanks so much for joining us. Always appreciate getting a few minutes of your time. Walter Todd, he's the president, chief investment officer, and managing director at Greenwood Capital, located in Greenwood, South Carolina, which I Googled, a little bit west of Columbia, South Carolina, a little bit north of Augusta, Georgia, and a little bit south of Greenville, South Carolina. So right smack in the middle of the great state of South Carolina. So some good stuff down there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We also cover all the great news that comes out of Bloomberg. And every day we try and hit the big take story. It's a deep dive into some of the pressing issues of our time. And today is no different. We're joined now in the studio by Max Abelson and Annie Massa from Bloomberg News. They had an in-depth piece about President Trump's family's money-making machine. What is the money-making machine, Max?
If we were able to put it into one word or one line, we really would have. Unfortunately, it does take like 4,000 words to describe because the machine is really, really big. I think what we ended up deciding is that no modern American president has ever positioned his family to make this much money while in the White House. And you can't oversimplify it, either as a supporter or as a critic. You can't say, oh, what he's doing is crypto, or oh, what he's doing is licensing his name, or oh, what he's doing is going overseas, or what the family is doing is making corporate connections. That it really is, we ended up thinking about this as basically an atlas to what the Trump family is doing. It's to take it seriously and to really focus on the facts and on the numbers and on the places. It was real work, and it was actually, dare I say, even fun to work with Annie on trying to figure it out.
There you go.
There you go. So Annie, I mean, Is this, I guess part of the question is, depending on how you look at it, is this legal? Is it ethical? What are the folks in Washington saying?
Well, when you look at the scale of what's happening, even just today, President Trump has announced that he's going to allow the largest holders of his meme coin to come to a special VIP event. So one of the challenges of working on this story was that almost week by week, there would be new details to add. And I think what Max and I found was that to go through each of these different categories, we covered real estate, we covered crypto, we covered this kind of grab bag of other ventures that the Trump family has become involved in. You have to go really deep into each one, and there's a high velocity of new deals coming. Now, from the ethical standpoint, what the Trump family has decided to do is they've issued an ethics plan for Trump's second term, as they did in his first term. The way that they've handled it is by putting President Trump's assets in a trust, which is overseen by his son, Donald Trump Jr. But there are some differences in the ethics plan of Trump's first term and his second term. This time around, as we note in the story, the ban on new foreign deals that existed last time is no longer in place, and you can see the new deals popping up all the time.
I found it very liberating, actually, to in our work, rather than putting ourselves in a position where we wanted to say Trump is the most amazing president and everything he does is amazing, or being in a position where we have to say Trump is the worst president and everything he does is illegal. What we tried to do is just to understand piece by piece the way the family is making money. And it was helpful to just use Trump's own words and own plan. Last time around, in the first administration, he was unwilling for the family to do new deals around the world. This time, the family is embracing deals around the world. And by their own account, what they're not allowing is deals with foreign governments. And when Andy and I look closely, what we found is that there are some deals, especially in Oman, especially in Qatar, that really test the edge of that agreement. They are with arms of governments. Now, it may not necessarily be the Trump organization doing these deals. Sometimes there are entities kind of in between. There's this one developer called DAR Global. So what we're hoping listeners out there will do is read our story, because we really tried to very carefully and without kind of, without doing anything but the facts, just really tried to understand everything about this money-making machine.
So how much of this money-making machine are real deals based on like properties and hotels, and how much of it are like NFTs and capitalizing more on the celebrity that is President Trump?
It would be so bad to pick one or the other. Annie pointed out, is the meme coin dinner literally tonight?
May 22nd.
It's literally tonight.
That's why your story came out. See the news peg there.
But there's so many other things too. Annie was really good, in particular, at finding like these new corporate connections.
Yeah, one thing. So it's kind of everyone kind of knows that Trump real estate empire has in many ways moved for a long time, been moving toward licensing the Trump brand for hotels and developments. That's a big part of what they do now. But what's newer in the second term is you see his sons, Eric Trump and Donald Trump Jr., joining the boards of companies, both private and public, and lending the name in a way to those companies. And what tends to happen when they join, either in an executive role or as advisors, is, at least in the case of public companies, sometimes the share prices of those companies will go flying. So it shows the celebrity, to your point, and name that they bring into the business world, into all these different ventures, including in crypto, but in other realms too, like prediction markets.
And to be fair, what Donald Trump Jr. will say, and what he said to us, is, I'm a private citizen. I've been a businessman all my life. It's ridiculous to expect me to stop doing what I do just because my dad is president. And then what Donald Trump will say, a White House spokesperson said to us, is I'm transparent, and I handed over this multi-billion-dollar empire to serve our country. The White House described President Trump as making a great sacrifice. I think it's really helpful, though, to just look at the numbers. And I just want to quickly mention what we found is that the Trump name is powering more than $10 billion of real estate projects since the re-election campaign began. A multi-billion-dollar valuation for this social media company, a money-losing social media company that just went public. Yep. I mean, you forget it went public last year, plus the money from crypto, plus the money from corporate connections. I think it's worth taking the time to kind of wrap your arms around it, because it really is sort of, I guess, unlike anything I've ever reported on.
And again, what I noticed is in this reporting that the first overseas trip President Trump made in his second term was to the Middle East. And I'm just looking at your reporting here. And when you talk about the real estate, it's Riyadh, it's Jeddah, it's Oman, it's, Simi Izma, which I don't know what that is. I think it's Qatar.
That's Qatar.
So there I see the connection. And, does it make sense that his first overseas trip would be to the Middle East? So interesting. Andy Massett, Max Abelson, reporters, Bloomberg News. This is the big take story here today, the Trump's family money making machine. Again, as Max and Annie reported, more than $10 billion of deals announced since his re-election got started here.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.